Hello and welcome to Gradient's weekly roundup of key business and financial developments in Sri Lanka for the week ending 20th May 2022. I'm Nishani Figuera and here are the top stories for this week. Budget deficit estimated at 2.4 trillion rupees in 2022. JP Morgan backs Sri Lanka's government bonds. No petrol until the weekend. Global tour operator TUI halts services to Sri Lanka. Rupee appreciates on central bank action. We will also briefly look at other notable news that made it across to our news desk and wrap up with the capital markets update. In our main story this week, Sri Lanka's budget deficit for 2022 is estimated at 2.4 trillion rupees as projected revenue is only 1.6 trillion rupees, amounting to approximately 13% of GDP. This was revealed by Sri Lanka's new Prime Minister Ranil Wickremesinghe as he addressed the nation earlier this week. The Premier painted a bleak short-term economic situation before a possible turnaround. Foreign reserves are almost at zero and losses on fuel and electricity are increasing, making the respective institutions no longer sustainable. The Prime Minister noted daily power outages may increase to 15 hours, but is working to avert this and that $20 million is needed for gas, whilst the situation with kerosene and furnace oil is even more critical. He added that there is a severe shortage of several medicines and noted that the central bank, local and foreign banks are facing a dollar shortage. According to the Prime Minister, a new concessionary budget is to be presented in Parliament soon. He also proposed the privatization of Sri Lankan Airlines. The national carrier lost $123 million in the 2020-2021 fiscal year, with aggregate losses exceeding $1 billion. Wickremesinghe said he is compelled to print money to pay state sector employees' salaries, despite this further weakening the rupee. As reported by Reuters, a news agency, US investment bank JP Morgan is backing Sri Lanka's government bonds, stating that the recent political changes in the country should gradually improve its strains and help its talks with the IMF. It added an overweight, effectively a buy recommendation on the bonds, commenting that political stability should pave the way for bonds to move higher from near all-time lows. Kanchana Wijesekara, Minister of Energy, told the public not to queue at filling stations until the 21st of May as the country has run out of petrol. He revealed that the Ceylon Petroleum Corporation owes $730 million on letters of credit for past oil purchases and a petrol ship. The minister added that one of the two ships carrying LP gas that were paid has arrived at the Colombo port and distribution of 80,000 cylinders will start from Thursday. Germany-based TUI, a global tour operator, has announced that it will halt all tours to Sri Lanka, citing the ongoing economic and political turmoil in the country. Speaking to Mirror Business, M. Shantikumar, president of the Hotels Association of Sri Lanka, stated that TUI's withdrawal is not at all acceptable and that it is a dangerous signal which might encourage other tour operators to follow. According to the Sri Lanka Association of Inbound Tour Operators, TUI's move will result in a 50% dip in bookings from international tourists. In April, 62,890 tourists visited the country, significantly up from a year earlier. During the first 4 months of the year, approximately 350,000 arrivals were recorded. In other news this week, the Sri Lankan rupee appreciated during the week, settling at 359 rupees against the dollar, with the central bank announcing a daily trading ban for the rupee-dollar exchange rate. This is to prevent high off-market premiums being charged from importers by exporters and to stabilize volatility. A further revelation was the arrest of several persons for attempting to transfer euros using the Undial system. Such deterrence is likely to help the rupee stabilize further. During the week, the all-share price index at the Colombo Stock Exchange gained on positive momentum on actions taken by the central bank, the appointment of a new Prime Minister, as well as his honest yet stark revelation of the country's economic situation. The index almost breached 8,500 mark on Wednesday. Sri Lanka's trade deficit in March contracted, with imports falling to $1.8 billion, down 5.6% year-over-year, offsetting a 3.4% decline in exports. Merchandise exports breached the $1 billion mark for the 10th consecutive month. However, agriculture and mineral exports decreased while industrial exports were up. Garment exports were recorded at $494.3 million, down 0.6% year-on-year. Refined petroleum imports were $429.9 million in the month, up 38.5% year-on-year, and coal imports were $90 million, up by 145% on increasing demand and high global prices. Moreover, imports of cereal and milling industry products amounted to $35 million, up a staggering 1,200%. At the weekly Treasury bill auction held on Wednesday, of the 90 billion rupees worth of bids on offer, only 16 billion were accepted. Yields on all term maturities were unchanged from the previous auction, while primary dealers had bid at rates around 24 to 31%. And that's a wrap for this week. Follow us on LinkedIn and YouTube for more updates on business and financial developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.